Good morning, everyone, and welcome to the Sirius Report. Well, the West is now accepting de-dollarization as a reality. Paul, as always, I want to thank you for being a part of this discussion, and we have so many different examples of this taking place right in front of our eyes.
Yeah, and thanks for joining us, ever, Ken. Always a pleasure when we get together. But yeah, this is not about the likes of you and I talking about this, Ken. We talked about it for years, and we've highlighted plenty of examples that shows the world that de-dollarization was a reality. The big shift now, and it's a massive shift in the mindset, is there are increasing people in the West and financial institutions who are talking very publicly, some of it privately, about the dollar as the world reserve currency coming to an end. They're discussing with concern about the US dollar's stability, its future as a world reserve currency, because there's a whole raft of points that are giving a lot of financial institutions and other commentators major concerns about all the risks they're viewing. And some of the obvious points is, and this a lot of it does relate in the last few weeks to the behavior of markets due to Trump's tariff policies. But one thing that's starting to have concern is the fact that the equity markets have been cratering. And that therefore, what does that mean for US companies? What does that mean in terms of their availability of credit? Because credit's going to get more expensive. What about external investment from overseas? Because everyone's getting more and more concerned about trading in the United States because of the unpredictability. So this all has impacts on the US dollar. There's growing unease about the dollar itself. You've even got too big to fail banks in the West talking about the potential of dollar crisis or a confidence in the dollar crisis. Why? In part because foreign investments in US assets are falling, and that is also tied in why equity markets do matter, because that's part of the problem. There's all this talk now about the dollar's exceptionalism, and obviously the dollar giving the United States this exorbitant privilege. Yes, for a long time the dollar was strong due to these huge inflows of capital into the United States for decades. There's now increasing worry and concern that capital is going to leave the United States and future capital is going to go to other destinations, which undermines the dollar. And of course, those destinations will include the likes of China, not exclusively. China stands to be a big beneficiary of foreign capital, as you said in a previous podcast, Ken, because the Chinese are opening their doors going, you're welcome to invest in our country and we'll give you every incentive to want to do so. And there is a growing concern in this, even in the too big to fail banks, about the dollar and its weakness, about the persistence of that weakness, about it getting worse, because there was this belief that tariffs were going to strengthen the dollar, but these institutions now believe they're going to have the opposite effect for a whole bunch of reasons. And I'll give way to you, Ken, because I'll come on to what some of those reasons are in a minute.
Absolutely. Two examples that have stood out, especially since Trump has instituted this tariff war, is in particular as the equity market sold off, as the dollar has fallen, we have seen a move into the euro, which comes out of nowhere. And that, in the past, we have looked at, yes, the Chinese or the Russians or the Japanese at some point have dumped treasuries on the market, and that's a form of de-dollarization. But when you start moving away from the reserve currency into a lesser currency, that really starts to speak about significance about who, perhaps even Europe, is not wanting to invest in U.S. treasuries, etc. The other thing, of course, is when you had the sell-off, there wasn't a move into treasuries as a safe haven. There was a move into gold, which really starts to speak about how much trust and reliance and confidence there is in the dollar in regards to what the future purveys.
Yeah, absolutely. And the thing is, with this trade war and all the policies surrounding it, that naturally has eroded confidence in the United States. I mean, and therefore, that just is a contributory factor to why it weakens the dollar. I think the weakening of the US governance and institutions is damaging the dollar as well. All the uncertainty around tariffs makes investors go, well, hang on a minute, I don't know what I'm dealing with. I'm not going to want to invest in the United States because Trump could put a tariff policy in place next week that would wipe out my investment. So you get, therefore, a lot of economic uncertainty, rising recession risks, and even worse, a depression. And that scares a lot of investors off from the dollar as well. And also, there's also the beneficial effects that we're seeing in the short term. We can argue the euro is not a great currency and the yen. I would agree with that. But there is growing belief, and that remains to be seen, that the euro-dollar exchange rate's going to rise in favor of the euro, and that the Japanese yen is going to strengthen against the dollar. Again, that's set against the backdrop that Japan's in big trouble, but also so is the European Union. But I think when you've got big financial institutions, including too big to fail, talking about the potential end of the US dollar's exorbitant privilege, you have to take it seriously, because these institutions would never have remotely considered talking about the US's dominant position in global finance and the global economy being under serious threat because of all this economic political uncertainty, because of the trade wars, because of shifting investor confidence, and how this is going to impact global markets going forward in the future. So this is something you have to take seriously. It's not pie in the sky. It's not people just making sensationalistic headlines, of which unfortunately has been going on for a while. This is the very heart of the US financial system raising serious concerns, because they've looked at the fact that dollars should have strengthened and it's fallen over 4% against major currencies. Treasury bond yields rose. They haven't fallen back as was expected. And in the next, 6 weeks, there's $6 trillion of debt has to be rolled over. By the end of the year, that's $9 trillion. That's a huge problem. Even in the West now, if you talk about dollar and treasury bonds being a safe haven, no one's buying it. People are very concerned. They are very fearful as to what the implications might be. They're also concerned about what China might do as a result of this. And also, of course, what's been highlighted finally is people are talking about the US's unsustainable budget deficit. And the United States is not showing any sign that it's going to lessen those budget deficits. In fact, they're likely to continue to grow and get worse. I know there's this idea of Doge slashing trillions of dollars. Well, the best estimate now is 150 billion, and that is already being chewed up by Trump's proposal for the military budget to increase 150 billion. That's a coincidence, but it's still part of the problem. The other thing, of course, is all this policy is threatening US businesses. It's threatening US institutions. I think there's a huge problem coming with the Federal Reserve. I'm no fan of the Federal Reserve because their attitude is inflation's high, and it could rise significantly this year. The Trump administration clearly and rightly, from their perspective, wants to slash interest rates. But the problem is, when you see this kind of feuding going on between the Federal Reserve and the Trump administration, this undermines US institutions. It undermines the dollar. It undermines the US treasuries as well. And therefore, it's just another major contributory factor. There are certainly elements within the Republicans who want tax cuts. That's going to only massively increase future deficits. And, therefore, that again makes the environment of the dollar in the United States less appealing to the world. And therefore, everyone's now starting to say the United States is going to face a major economic crisis. And at the heart of that is the dollar's global dominance is disappearing. And these are things that are a reality. They weren't a reality in the mindset of many people in the United States, but now finally they are seeing it to be a reality. And the fact the US dollar hit a 3-year low against the euro, the way the Swiss francs firming up against the dollar and had its biggest rise in a single day in history, is not something you can just ignore. And when you have fund managers also coming out going, the dollar's no longer a reliable safe haven, then they're going to start to go, well, where are we going to park our money instead? And if all the money seeps out the United States, that is an enormous problem. And if you don't believe in the dollar anymore, you think there is no safe haven, there's no stability in the US financial system. And therefore, what's going to happen to US treasuries? The yields are going to rise and rise because you're going to have to attract someone to buy them unless you think you can just print to infinity, which the United States may end up having to do. But international investors are not going to want to be partaking in the US. They'll lose faith and confidence in US assets to invest in. I mean, so, and also on the back of this, of course, they're all looking at this going, well, the Chinese and the Russians and obviously the ASEAN countries and the BRICS, well, they're talking about multipolar world with different currency systems. So if the US carries on doing this, that could only accelerate a major move into multipolar world currency systems, financial models, and currencies like the yuan may start to take on greater significance. I think at some point we're also going to see greater significance applied to the ruble because Russia has an enormous resource base, as we know. And then we have all the contradictory problems that exist in the Trump administration, where 1 minute they say one thing, then they contradict themselves. Whereas there's this argument that in the United States where they will say on the one hand, a strong dollar harms US manufacturing. Well, yes, but they're in no position to switch to manufacturing. But a weaker dollar now is only going to make everything cost even more in the United States. So when you have all these contradictory policies and ideas that somehow the US is going to have the world be grateful for defending them from these enemies that don't exist, as we said previously, and for the privilege of that, you're going to bankroll us and rebuild America. The world's going, no, we're not, and that again means no one wants to invest in the US. People are increasingly unsure whether they get sanctioned tomorrow or what's going to happen with tariffs. So they don't want to hold money in dollars. They don't want to buy US treasuries because they think economic policy tomorrow could see bonds significantly devalue. And then they're underwater. And if they're underwater, and in the world of financialization, they could end up in serious trouble as institutions. So overall, there is no way around this decision that Trump's decided to make. He's basically dug a hole for the US dollar. It's already been in a hole. He's dug a hole with regards to US treasuries and investing in the US. And if you create a lack of confidence, it's very hard to get it back. And the argument is when the Western institutions and companies and financial institutions say, well, we don't regard the United States as a nation to invest in, we don't have confidence in the dollar and the treasury complex, then the writing's on the wall. And this could turn very, very rapidly into a major problem for the United States. And then Americans are going to realize that they have been living beyond their means and that they've been able to give every nation worthless bits of paper. And the US gets printed money to buy cheap goods. And when all that vaporizes and they don't have that privilege anymore, then they're going to understand how it was the United States ripping off the world and not the Chinese ripping off the United States.
It's that contradiction you mentioned a few minutes ago that really is of significance here, because Trump, on one hand, speaks about wanting to have a strong dollar and to hold the reserve currency, make it stronger, make the rest of the world want to come back to it. At the same time, he wants the U.S. to be a manufacturing juggernaut and to be able to provide and have equal on equal productivity, if not superior productivity, to the rest of the world. Well, that brings about, of course, Triffin's dilemma or Triffin's paradox. You can either have the control over the reserve currency, or you can have a production society, but you can't have both. One relies upon getting cheap goods from the rest of the world, and the world accepting their current, the dollar, the reserve currency. While meanwhile, if you're the one who's trying to become the debtor nation and bring dollars back in, all you're doing then is you're cutting off the ability of the rest of the world to get dollars, to afford dollars, to buy your goods, and they won't be able to afford to buy your goods, etc. So it's that contradiction and that comes about. I think the other important factor too, in regards to this, is that the reserve currency that we currently have is a byproduct of a time of global internationalization, a singular reserve currency coming out of Bretton Woods at the end of World War II. And the world has pretty much sustained under that for whatever time. Well, as Voltaire used to say, the end game result of any fiat currency is zero. And the purchasing power of the dollar, because of its increased supply and loss of purchasing power, is nearly at that point of zero. So nations don't want to hold something that has very little value and is increasingly losing its value as the U.S. creates a national debt or an international debt, et cetera. Plus the fact that the world is still tied. I think there's 95 different currencies tied to the dollar. Thus, we have a global debt of 300 to 400 trillion dollars. It's just at that point of collapse. And couple that with the fact that we're seeing a rise also politically in nationalism, where nations want to retake back their sovereign control. And in doing so, they want to have control over their own monetary systems. The dollar is almost like an anathema for them to be able to bring about whatever political as well as economic future that they want to see. And we haven't even touched upon the fact that since the tariff initiatives have come out of the United States, we're getting ready in within weeks or a couple months of the next BRICS summit. And you can bet that de-dollarization and the dollar itself are going to be a major question in regards to what happens in interaction with the West, the United States, et cetera.
Yeah, absolutely. And I just want to make a final point because you talk about pegs with currencies. The US can sit there cheerleading oil prices falling, which actually it bounced back off the $60 mark because 60 probably is the point where shale oil becomes totally unsustainable from the perspective that there's no point drilling new wells or trying to continue oil production because at that price you're producing it at a loss. But here's the problem, and given what's happening, there's a dollar problem for Saudi Arabia. Now, they can only resolve it one of two ways. Either oil has to go up hugely in dollar terms, or they have to break the peg and the real will have to appreciate. Now, because of all the shenanigans that are going on, and Saudi Arabia needs oil to be at $80, $90 a barrel, otherwise they're in enormous trouble in the shorter and long term. Well, if that happens, what does Saudi do? At some point, it might have to break the peg, and if it breaks the peg, what does that mean as well in terms of not just the real but the dollar? And what signal does it send to the world? And when do we start to see other pegs breaking because of US policy decisions that, frankly, I'll be generous and say myopic, but we could use far stronger language, but we won't because it's not appropriate on a channel like this. But they're just another example of all these unintended consequences that we see and what the risk is as a result of this.
Absolutely. Either way, while the de-dollarization question has been really percolating around since about 2014, maybe even a little bit before then, it's really starting to accelerate. And the important thing is now it's being bandied as a real possibility here in the West from a number of different hedge funds, from a number of different economists, from Europe and the like. So it's definitely something to look forward to, and we're going to be on top of that. Paul, as always, I want to thank you for being a part of this discussion and for all of your insight regarding this.
Yes, and likewise.
And to everybody here at the Sirius Report community, thank you for all of your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to. And until the next time we get together, have a great day.